This is the briefing for Friday, March 22nd. Well, as of yesterday's trading, we reached the point of being short-term oversold, and that led to the possibility of some type of potential rotation back to the downside. This is NYSE, and you can see this is the short-term indicator. This is the NASDAQ short-term indicator. So basically, we got some type of a slow rotation down today, a little bit of a gap down, and then a rotation for the rest of the day. You can see here we're testing this 520 area in the spiders, which is the support level right now. Resistance is the high from yesterday, so there's really no resistance except for the high of yesterday. What's really concerning, and really that there's not a whole lot to talk about in terms of price development and price structure today, except for the fact for volume. Volume is just incredibly low, and if we look at this short move, I think this was like 2 or 3 days of trading right down here that came down and tested this 510 area, that you can see volume increased going into that low, and then of course as it rotated back up again and started trading up to the 520 area, look what happened with volume. This is volume in the spiders. It's had a slight tick down in 52-week highs minus 52-week lows, and breadth declined in today's trading also, which was resulted in working off that short-term overbought condition. So this is just very, very concerning to me, is what's happening with volume in the indices themselves. Looking at the Qs, the same situation here. You can see volume increasing on this move to the downside into this peak. And you can see that the test of this 434 area, and that's when volume was the greatest. And then, of course, there's rotation back up to test 450, which is this high here. And then, of course, we see what happened with volume. Now, interestingly enough, we have a double top. But as in all technical patterns, they are not typically, they have to fulfill themselves. So even though we see a double top here, it's not a double top until we see some type of substantial move back to the downside. In the NASDAQ, breadth fell off. Nicely it fell off, working off the overbought condition that we saw in yesterday's trading. And the same thing in the Russell. Russell tried to trade harder, traded back below 205, which is support. Now it's resistance, but it really, let's call it closing right at the 205 area. 210 is upside resistance, and then below this 205 area is 200. This is just a rotational pattern that the Russell has been in, the IWM has been in for some time. Same thing is happening here. You can see these 3 to 4 days of rotation up, and all we have here is a decline in volume and breadth declining also in today's trading. So from an internal perspective, the internals are really not signaling that this market is strong or strengthening, or that the trend is strong or strengthening. But the key moving forward, and I'm going to go back to the spiders here, because this is a series of run, pause, run, pause, run, pause, run, pause, or a series of higher highs and higher lows, which is the definition of a trend. When this tested the 210 area, that was the opportunity for the market to trade through this 504 area. I should say the 510 area, not 210. Trade through the 504 area, which would have suggested then a greater degree time and price counter trend rotation. That did not happen. The series of higher highs and higher lows was sustained, and you can see that right through there. So now the next lower high is going to be at the 510 area. So if we do get a rotation down, trading through that 510 area would then suggest a greater degree time and price counter trend move, which on a longer term chart, say a weekly or a monthly chart, this would be a run, and then you get some type of a pause. But right now, the most concerning thing about the continuation, and we must respect the trend is up. There's no question about that. There was an opportunity here at 510 for a counter trend rotation. That did not happen. The market ignored it, and of course we got this move back to the upside. So it's just very, very concerning to see this continuation with volume the way it is. It makes having any confidence in this rally very, very suspect, at least at this point in time. Let's look at total volume. This is total volume for the NYSE, and this is total volume for the NASDAQ. These spikes are this is option expiration day. Option expiration days. The lower spikes are month-end closes. So those you have to basically eliminate those from your analysis. But basically, you can see what's happening here with volume, and you can see the trend in volume, total volume on the NASDAQ is doing the exact same thing. Looking at where we are in terms of the percent of stocks above 50 and 200-day moving average, we have had a recovery. But if you look at this and where price was here and where price is here and where the percent of stocks above the 50-day moving average is, you can see the huge divergence that's occurring there. Percent of stocks above the 200-day moving average declined slightly today, really just kind of at a limit right through here. This should have been exceeded pretty substantially based on where price is. Same thing with the NASDAQ. You can see really not going anywhere above its 50, the percentage of stocks above the 50-day moving average, even though price is moving higher. And I'm pointing this out mainly to show the divergences in the internals that are occurring. And the same thing with the percentage of stocks above the 200-day moving average. And then, of course, in the Russell, we have the same thing. Really not a whole lot happening right there, and the same thing with the 200-day moving average. So basically, the real crux of the matter here is what's happening with volume. And really, it makes, you have to respect the trend. The trend is up in price, but it makes having confidence in that trend really suspect because of the decline that we're seeing in volume. If this were a very strong rally, it would be attracting more and more buyers there, and those buyers would be buying more and more shares, and that's not what we're seeing here. We're seeing just the opposite of buyers that are potentially waning. And the problem with that is that if the sellers begin to show up, the selling could come, and it could come very, very quickly. So just use caution, respect the trend, and just use caution based on what we're seeing in volume until that changes. Have a great weekend. I'll pick this back up for subscribers on Monday.